So my next guest says that since 2020, investors have been conditioned to separate signal from the noise. Events like COVID, regional bank crisis, the election, Liberation Day, all of those came with acute volatility. Swift market recoveries, though. I want to bring out J.P.Morgan Wealth Management, their chief investment strategist, Phil Camporeale. And you know, it sounds like this is a good thing, right? Yeah. But I keep hearing, you know, anytime you watch any or consume any financial media, the maybes on Wall Street think it's a bad thing. Like, you know, you're ignoring this, you're ignoring that. Yeah. They're always kind of pushing the bad stuff in front of our face.
Yeah. So first, to start off, great day to be a Knicks fan, and an even better day to be kind of a diversified, balanced investor. So what am I talking about? I'm talking about if someone would have told you almost 90 days ago, Charles, that the Strait of Hormuz would be closed not just for one day, but for 90 days, and a diversified global portfolio would be up 6, the S&P would be up 9, you'd be like, how could that be possible?
Right.
So what, again, this whole theme of separating the signal from the noise. The noise is, yes, Strait of Hormuz has been closed for 90 days, pushed oil prices up, pushed inflation up, pushed gas prices up. However, what's going on under the hood fundamentally, especially from consumers, which are really the backbone of the U.S. economy, is really important. And one of the things that we keep looking at is that those top 20% of earners in this country don't do 20% of the spending.
Right.
They do over half the spending in this country. And Charles, those folks only spend about 3% of their disposable income on gas, oil, and electric.
Right.
So that is what's keeping this going on.
And even if you broaden it out, you know, more people on the market, that wealth effect is trickling down to other people who never enjoyed it before, and that kind of keeps even them strong. The surveys and what's in reality, to your point, are almost always different, right?
Yes.
The lowest sentiment in history.
You ask. That's right.
So let's another thing then that's popping up right now is the inflation situation. Inflation is going to derail this market. The Fed now has to cut. You got a couple of firms, BNP's hike, brother. Yeah. They got them hiking 2 times. Pantheon's got them hiking 2 times.
Yep.
You say there won't be any hikes this year.
Yeah, so we would just respectfully disagree, right? Anything can happen with the Federal Reserve, as we've seen, because they were supposed to be easing, right? Now they're on hold, and now people, as you say, are going into hiking. So 3 reasons why we don't think the Federal Reserve hikes this year. The first is hiking rates isn't going to reopen the Strait of Hormuz, right? So it doesn't mean that if you hike rates, it's going to control energy prices. Energy prices are what's driving inflation. Right. It's a supply-side story, not a demand story. The second thing is our labor markets. We're only producing about 27,000 jobs a month over the past 12 months. It is a no hiring, no firing economy. Wages are normal, and they're not worried about a wage price spiral. And then the third piece is inflation is very slow moving on the longer term expectations. So while, you might be asking people, do you think prices have gone up? Of course they're going to say yes, but what the Federal Reserve cares about is not inflation today. They care about inflation in the future, and those market measures seem to still be under control at this point.
And that's what they call look through. They look through the current noise. That's your theme.
That's right.
Your base case outlook, rate volatility, fundamentals, U.S. dollar. What is it about the U.S. dollar? Is it strong? I mean, this is something like you have a really wide dispersion of opinions on Wall Street. Does it have to be stronger? Have to be weaker?
Yeah, so in our opinion, when we're talking about the U.S. dollar, we think U.S. exceptionalism up through the beginning of last year was at an extreme level. And now you have more balance there. You have more countries than the U.S. doing fiscal policy, more countries doing monetary policy looks the same, and the fundamental growth story in places like Japan or China or the U.S. are starting to converge. So in our opinion, the U.S. dollar, even though it's strengthened a little bit recently, we think it's in a multi-year kind of weakening trajectory. And why is this important? Because we want investors to be globally diversified. If you take a bet on a company outside of the U.S., you don't want the dollar to eat away all of those returns.
Let's talk about this piece that got a lot of action last week, the saying maybe the best weighting for, instead of 60-40, could be 90-10. Now, I've been in the camp since COVID that maybe 60-40 is dead, or there are other things. Do you still like the 60-40 split?
Yeah, so what we would, and again, depending on what your risk profile is, 90-10 could be okay, right? Depending on age and things like that. But as far as the 60-40, when I say it's okay because I believe that ultimately, over time, stocks and bonds should move in opposite directions. And you're not making a bet on stocks or bonds, you're making a bet on the relationship between the two. And Charles, it's holding this year. Stocks are up, bonds flat to a little bit down.
Right,
So a 60-40 up 6%, that's what we think it should be over an entire year. So we think that you've gotten a year's worth of return on the 60-40 in only 6 months, and we truly believe in the power of diversification. And that's why any mix between stocks and bonds makes sense.
And again, equity allocation, you like that, U.S., but you also say emerging markets. To your point, you want folks to be diversified around the world.
Yeah, and that's the AI story. Listen, there's 70% increase in chip demand, a 30% increase in supply, and some of those, non-US semiconductor names make a lot of sense.
Well, you should see all the money pouring in those Korean stocks, that's for sure.
100%.
Phil, great stuff, my man.
Thank you,
Appreciate
Charles.
it. All right.